All right, we're ready to go, ready to go. So we're going to talk about inflation. We're going to talk about interest rates. We're going to talk about latest 7-day numbers, and we're going to have some fun doing it. We're trying to make this as interesting as possible so nobody falls asleep. That's the goal. Stein Realty Executives in the Villages broker here. Hope you're doing well. As many of you know, we've been on this channel for quite a bit for the last couple of years and try to give weekly updates. That's one thing, but also try to give as much value. I think that's really, really important. Not try to sell anything necessarily. If you feel compelled to call us and you want to work with us at Realty Executives, give us a call, 352-572-3796. If you have questions, you could also leave your info in the chat. Love to hear what's going on in your market. Also would love to get an idea as to if you are seeing in your marketplace, if your local realtor can tell us if there's a little bit of a shift, right? So a little bit of a mixed bag, obviously, here in the villages and surrounding areas where we're seeing some properties stay on the market for, a week or two, and a little bit of seasoning, which isn't the end of the world, by the way. We just have been really incredibly spoiled that properties selling in, average days on market. 3 days has been for the last, 3 or 4 days over the last 6 to 8 months. And, if it takes 2 weeks, then it seems like forever. But some properties are selling in, one day and getting multiple offers. Like, talking to my agents and realtors, and we're hearing multiple offer situations and having to deal with that. So a little bit of a mixed bag. And of course, about 3, 4 weeks ago, we did see a shift in the market where we went from, for many, many months, we were in the 70 to 80 properties that are active. And now we've gone up to the 100, and I think we're 100, we went up to like 120. And I'm going to give you a real accurate number in a few minutes. Like 51 properties, new listings have come on the market last 7 days, 2 price increases, 25 price decreases. So about 3 weeks in a row, we've been into the 20s as far as decreases. Back on market 6, sold, aka closed 40, which is kind of an average, maybe a little bit below average. But then once again, we're in the second week of April, and most of the closings will happen towards the end of the month. 55 pending, which is actually a little bit larger than normal, meaning 55 properties went under contract the last 7 days on MLS here in the Villages, Florida. So we're going to be talking about interest rates, and obviously interest rates have jumped up, and I'm going to be interviewing Todd Hassey with our favorite mortgage guy, and he's that's not today, but in the next week or two, we're going to be talking about what he's seeing as far as mortgage rates. I'm hearing rumors, not through Todd or some other mortgage people, but other people around the country that are predicting, 6 is just around the corner. We're already just above 5% in many situations. Some people are still locked into lower rates, 4%, but now the current rates seem to be over 5 and going to maybe 6, 7+%. I heard one person say 10. I was like, what? It's crazy. So we'll see. We'll see if that's the case. If it gets up to that point, that's going to be really interesting. And of course, look, the handwriting's on the wall. Inflation is a real thing. We know that when we see it at the gas prices, and we see, when we go to the grocery store, when we buy chicken or meat or whatever you're going to buy, going to the restaurants, right? We see that. If you think about it, I think for the first time ever, I'm talking about, well, back in the day, this is, this 2 years ago, this is what it used to be, and now we're talking about, how things are now. So it's very interesting. We're seeing inflation for sure, and because we're seeing inflation at record numbers, that's a big deal. And actually, I do want to go into my email. I do want to show you something that's going to be really interesting. So 132 properties on the market. That's the most we've seen in the villages in a long time. So that's really, we've seen an increase. So, probably 10 to 12 properties over the last 7 days. That's a net plus 10 to 12 properties. Actually more like 17 to 15 properties, because we were right around that 112, 113, then 115, and now I feel like it's jumped up another 15 to 17 properties. We're now 132 in the villages. That's actually the most we've seen in a very long time. right? Probably at least, I don't remember the last time it was, probably at least 8 to 10 months since we saw that number, maybe even more. Probably maybe over a year is what I'm thinking, but it's been a while since we saw that type of number, and it seems to be increasing. So that's one of the effects that we're seeing is like increased inventory. I think that's good news for a couple of reasons. One of the reasons why that's good news is that buyers have been having a challenge on finding things to buy. Like that's been a real thing. It's been a real thing. People have had an issue just finding properties to buy, and now what we're seeing is we're seeing slightly more options. So I think that's a good thing. One thing I do want to share with you. Let's see. I'm going to share with you one particular slide. Let me see if I can find it. It is, let's see, I want to share with you a particular slide, and it's about inflation. And if I don't find it, we may just move on to something else. And I think that's what we're going to do because it looks like it might be a little challenge for me to pull it out. But if you do some research, and this is actually coming from New York Times, right? New York Times inflation numbers. And if we look at the inflation numbers, pretty much close to double digits, and we're seeing inflation numbers that are not quite as high as what we saw in the mid late 70s to early 80s. Many of you can recall that. If you guys remember the days, I'd like to see some comments from you. Like you remember the days and times where inflation, right? Remember the gas lines? I remember I was a little kid back then. We saw long lines at the gas station. Inflation was, record numbers. Interest rates were high. What was the interest rate you bought? What was the highest interest rate that you were at when you bought a home? So the highest interest rate that you ever had, I'd love to hear and see your comments on that. But, of course, big numbers there. Certainly, we're not anywhere close to that. But inflation numbers are not that far away from what we saw in the 70s and early 80s, for sure, back in the, Jimmy Carter, Ronald Reagan days. So, that tells us a lot. We're not anywhere close to that, but it does have an impact, a little bit of an impact on the real estate market for sure. Okay. So one thing I do want to share with you, we're going to take a look at, some of the, the rising interest rates. We're going to take a look at that and the impact on the market. So let's see if we can pull this up here. So, one thing that we do know is that we're looking at mortgage rates rising this year, right? Like this was actually end of March, we're at 4.67 as far as interest rates in March. And now we're, certainly over the 5 number is essentially what we're seeing at this point. So that's something we have to look out for. I'm actually looking at the numbers, the inflation numbers, 8.5% in March, over 14% back in the day when early 80s and over 12 back in the late 70s. That gives you a little bit of perspective. But that's a U.S. inflation number that is from NewYorkTimes.com if you care to kind of look at that. So that's something that's really, really interesting. So let's move on. So we talked about interest rates. Let's look at some other things that are really, really important as far as let's look at. Let me share this with you. So let's look at this next slide here. And this slide has to do, this is very interesting, coming from, a lot of the economists right now are, they're really, really talking about some interesting things. So let's look at this. Mortgage rates are likely to continue to move higher. So that's the anticipation. This is from the deputy chief economist, Len Kiefer, with Freddie Mac, right? Freddie Mac of mortgage fame. Much of the increase in rates in early 2022 is in anticipation of what will happen later this year, especially with the Federal Reserve interest rate policy. So that kind of talks about talks about what we just covered and just reiterates that particular point. So if we were to let's take a look at what happens when inflation and let's look at rising rates and what happens with pricing. I think that's something that is something that's important, really important when we look at this. Okay, we're going to stop share. This is how you know we're doing this live. So here's something that we need to look at. So back, if we look at 1993, there's a 14-month period where we saw an increase of 2.3%, and home prices went up by 3%. So increase in rates 2.3, 3% increase in pricing. Let's look at November 2012, where increase in interest rates were 1.1, and the home prices went up by 11%. What it tells me is that, obviously these increased in interest rates were put in to actually curb the market a little bit, which is what we're seeing right now. And the effect of increase of interest rates the effect of increase of interest rates on home pricing. So inflation goes up or home pricing is going bananas. The Fed implements some policy to increase the rates. It affects the mortgage interest rates. And because of that, this is the impact. So obviously, larger increase in interest rates means that we'll have a a greater effect, but lesser appreciation is essentially what we're seeing here mostly. There's a little bit of a variation in 1996, but mostly what we're seeing is different times had different effects. And of course, there's a lot of different variables with the economy. We have to take that into account. It is a thing where we have to really watch it because, it obviously has an impact on what we're doing. It obviously has an impact. And this is the slide I wanted to share with you, right? So take a look at that for a moment, right? So impact of rising rates on home prices changes when mortgage rates rise by more than 1%. Okay. So that's pretty much what we're looking at there. Okay. Very interesting. And, when it comes to the villages, when we start looking at the villages, obviously there's been some impact because we've seen a large increase in inventory. We've gone from 70 to 80 average, approaching 90 at times, and now we're at 132. So we're seeing 40 to 50 plus homes on the market, a net positive or addition in inventory, meaning that more people have a chance to buy a home. We're seeing that. We're seeing a little bit less competition, even though mostly in the villages, it's mostly cash, and interest rates do play a little bit of a part of it. We're starting to see some people decide, you know what, we're not going to use a financer, we're going to do cash because the interest rates have gone up. So there is the ability to pay for a property cash. We see 50% of the properties or more are typically cash only, and the other half is usually mostly cash with a little bit of financing involved. So there might be 50% down in a particular transaction. So what's the impact? We know interest rates have gone up because inflation has been up for a while. There's obviously concerns there. What we're seeing is increase in inventory, and I think long term, I think we're going to continue to see this more inventory on the marketplace. Remember that inventory at its peak over the last couple of years, just a little bit of a reminder if you're new to the channel, 451 properties back about 2 years ago. And we still had a pretty normal marketplace, meaning, homes were still selling. It wasn't too many homes on the market. It was just a really good amount of homes on the market. And we still had 60 to 90 days was the norm in the northern part of the villages. The southern part of the villages was typically 30 days or less on the market. And of course, with all the demand, inventory went down over the last couple of years. And of course, days on market went down to all the way, 3 to 4 days on the market, and with multiple offers all over the place. So that's the impact. I think that's what we're going to see. I think prices will continue to go up for a bit, and I think that last slide really, really shows that. It just won't go up to the same amount, right? It just won't go to the same amount that we've seen in the past. But we're seeing less appreciation, more inventory on the market, and I want to share with you one more slide just to reiterate this point. So impact of rising rates on housing. This tells you a little bit of some other times where we saw an increase in rates, home prices This was the home price effect. And then here are the home sales, the number of homes that were on that actually closed and sold during those years. So obviously home prices still went up in all of these cases, even though the interest rates went up, which makes sense because the interest rates gone up so they can cool off the market a little bit. But that also had an effect on how many homes sell. So this is a really good slide that indicates a couple of things. And these are nationwide numbers. But what we are seeing is, okay, look at present time, increase in rates, yes. Home prices going up, yes, still going up slightly. And we have seen, and I shared this number with you a couple of weeks back, where home sales have gone down. We've seen less home sales year to date, January 1 all the way through, and I think I probably did this all the way through first quarter, end of March, versus last year. If we do year to date, 2021 versus 2022, more homes sold in 2021 than first quarter of 2022. And it was pretty significant. I believe it was probably at least 10%. I don't remember exactly what that number is, but definitely a double, I think it was right around double-digit difference. That tells you something there. So market crash, no. Market adjustment, yes. Good time to buy. Looks like it is a good time to buy. Will it get better in the future? I'd like to hear what you think. I think it will get a little bit better in the future, but the minute that you wait and try to time the market on the buyer side, then you miss out on opportunities. On the sell side, is it a great time to sell? I think it really is. I think we're at the right around, I'm not going to say the peak, but we are right around the peak. And based on what I'm seeing moving forward, rising interest rates, rising inventory tells me, you know what? You should probably think about selling. If you're talking about timing the market, now's the time. If it's not the right time, then don't worry about it, right? Not perfect time to buy or sell. Don't worry about it. But questions, please let me know. Love to hear your comments. Happy Friday. Happy Easter to everybody, by the way. So hope everybody has a safe weekend. Enjoy, and we will connect soon.